Hey everyone, this is the AbleSys update for Monday, April 9th. Here we have a picture of the E-mini Dow for the 3-minute, 9-minute guidance chart, and what a roller coaster ride it was today. We saw that prices had actually been up better than 600 points off of Friday's lows, and intraday, the Dow was up better than 300 points, but in the afternoon it gave it all back and more for the intraday session. And I think this reads as a significant confirmation of what we've seen develop last week. For day traders, we've seen a continuation of that volatility. Today in the S&P, we had a 40-point range, and the ATR is still better than 60. To put this in perspective, we want to see at least 80 times the ticks. So for a product like the S&P, which has a quarter point, 80 times a quarter point is 20. So we're seeing better than 3 times the amount of price action that we need for to consider a product tradable. That gives us the possibility of having good trading sessions even when the market is choppy. Obviously today was a good day, but even on days like last week's Tuesday and Thursday where we had a choppy session following best practices, we still could have seen a profitable day. In the S&P Mini, we can see here we had a nice sell opportunity in the afternoon. When prices started to turn around, we had the 3-minute had already rolled over. We saw that prices broke the 3-minute support. There was a pullback into the 9-minute direction. There was a 3-minute pullback, and with just about 2 or 3 points of risk, prices were able to break down another 30 points into the close. And I mentioned on Friday that the implication of the continued volatility for day traders means that we can actually go down to shorter time horizons to look for those trading opportunities. If we look at this 3-minute chart, the morning was a little bit crazy. We saw that prices initially started to take out the lows. Then we saw prices take out the overnight highs. And then we see a pullback. Even though it's coming right back down to or close to the dots, when prices start to go back up, we're seeing about 5 or 6 points down to where we'd have to have a stop for the initial risk. And so we can actually have the possibility of trading quicker with less risk by going down to a chart like the 1-minute and 3-minute. And incidentally, before we go to that chart, we can see here how after the price started in the right direction, it takes out the intraday highs, goes up. There's about 40 minutes of sideways price action, which we'll talk about in the 1-3-minute chart, and then the continuation into lunchtime. Then we see prices start back down, and then we're fortunate to have a pullback into the 3-minute, the dots there, and then another 30-point sell-off into the close. All right, now here's the chart on the 1 and 3-minute chart. So we see the same thing here. Initially, prices were going up in the morning. They took out the lows. Prices start to pull back here, and then they just continue on through. They take out the intraday highs, and from there, when prices start to pull back, this is what we were talking about before. There was a 9-point pullback from the high from the intraday point at that time. And as prices come down, they come within about a point of where that 3-minute support is. When they start to roll back up, that's a really good signal to get long. And as we can see from this point, or from this perspective, there's actually some room for prices to go up into the roadblock. We can see about 3 or 4 minutes there before prices really significantly took out the highs. And at that point in time, we could have had about 3 points open profit and actually a chance to scale out with a limit slightly below the roadblock. If we were looking at the initial risk here, we can see that it's much lower, somewhere in the rounds of 3 points as well. So we can see here taking the price out of the or breaking out of the intraday highs and then continuing up. This is that period of time where we had sideways price action. As prices are starting in the right direction, the shorter time frames are going to be more susceptible to noise. So clearly here, there's about 40 minutes where prices aren't going anywhere. We see here that prices failed to continue down and then turn back into a buy signal. Using the previous level of dots for the 3-minute chart, we could potentially have a point where we could just use the entry point as a point to scratch out of the trade, particularly if we had scaled out of the position slightly, especially when prices were kind of going parabolic to start. If we hadn't, then this would have been another opportunity to take the position on, and it just continues up nicely from there. And going into the close, this is that point where prices had taken out the 9-minute support, pulled back into the 3-minute resistance, and then started trading back down. You can see that we have the same opportunity for that trade on the sell side, but we also actually have a good opportunity to see the trade come on slightly earlier and with very, very little risk as that initial break is starting to happen. From over here, the swing trade picture hasn't really changed much. Of course, whichever way we see it, trading is only a function of managing risk. This time the sell-off may be real, but also since 2009, we've seen a number of times where some volatility has been introduced to the market and prices didn't end up going down. Long-term reversals can take a really long time to materialize, and we don't want to have to rely on any reversal prediction to be correct. So the swing trade is really the same as day trading. We want to take our directional trade ideas into the testing points and then scale out and then let the remaining exposure benefit if the breakout is real. So again, here, as we're starting to see this turn around, if we get a nice pullback to the resistance, or incidentally for the Dow, when prices were up at this 2-hour resistance point, to look for prices to weaken and take it down into lows. Okay, that's it for today. We'll catch you later in the week.